Morning. It's Tuesday, 16th April 2024, and it is a friendly neighborhood analyst Vijay here. Welcome to the pre-market commentary. The title of today's commentary is Why Markets Fell Yesterday. The point is we are now going back to yesterday. Yesterday morning, everything seemed hunky-dory. There was almost like a ceasefire between Iran and Israel, and the Asian markets are doing well. The US futures were doing very well. Gold and silver was steady. In fact, they had been beaten on Friday, which meant a risk of scenario. So everything was there for the bulls to participate. Yet yesterday, we were the only large market which started falling right from the beginning. It opened lower, then it tried to go up, but then it did not sustain, and then it closed at the lows of the day. So this must have surprised a lot of people as to why the market fell yesterday. There can be only three reasons why Indian markets behaved very differently than the other markets. One could be that Indians knew that there will be a meeting of the Israeli cabinet, and they will escalate the Iran-Israel issue. So you are expecting clairvoyance from the Indian operators. The second is the corporate results. The corporate results, TCS came with results supposedly good on Friday evening, but yet it did not hold to the early morning gains, and it also closed near the lows of the day. The third could be some political rumblings. I have long believed that the market, not only believed actually, market has demonstrated that the markets are superior to all the cephalogists which we come across. So we will have an interesting 3 to 6 weeks ahead before the results are declared. And I follow these options very closely. In fact, my friend Subhadeep Nandi does a better analysis than I do. And here is his analysis, which is very, very interesting. Just let's have a look at this. So Subhadeep, for instance, talks of what is happening on the monthlies in terms of the options. Now, if you really look at it, the put options, normally if the market is bullish, the puts should be written in greater numbers and calls should be bought in lesser numbers. That is, the people who write the options are the stronger ones. So that is the smart money. The smart money should write puts if they are bullish and write less number of calls. Now, what has happened in the last few days is that the puts have been started being covered by the smart money. Just let's have a look at this 21,800 monthly put. It has come down by 12,75,650 contracts. It's a 41% drop. To take the 22,500 is dropped by about 19%. 22,100 dropped by 35%. 21,700 put dropped by 16%. See, these puts are still far away. 21,700 is still far away, about 500 points, 600 points far away. Yet people are covering their puts. Normally, if it is far away, people will write the puts. But here you are seeing a decline in puts. Same thing with 22,200. This is at the money. There is a decline of only 7%, but the large declines are at the lower levels, 21,800, 22,100, and 21,700. This is something one needs to be concerned about. Then let's have a look at the call. This is where the calls are. If you really look at it, the calls have been increasing, which means the writers are bearish. The writers are bullish. Writers are bearish in the puts because they have covered the puts. Writers are bearish on the calls and they have been writing calls. So you see 22,700, some 43% increase, and in 22,600, which is, these are all out of the money. So one can expect some increase being there. But what has happened to, say, 22,200? There too, there has been an increase, 22,550, 22,650 across the board. Calls have been written. So now you have a scenario where the puts have been covered and the calls have been written. This is a very deadly combination as far as the market is concerned in terms of, the direction. The direction clearly by the smart money is that they expect markets to seek lower levels as we go along. Now let's take a look at what has happened to the Nifty, for instance. Okay. Yeah, let me cut this here. Just let me sharing this now. Again, let me start sharing to you on the Nifty. Nifty, what has happened is these lines, the blue line and the green line, are very important to understand where we stand and where the positive of supports and resistances come. So this is the blue line, red line, and the green line. The blue line is the 9-day moving average. The red line is the 20-day, and the green line is the 50-day moving average. So now Nifty has already broken the 9-day moving average, and it took rest yesterday at the 20-day moving average, which is a very strong support. If you really look at it, very rarely does it go below 20-day moving average. Now the next one is the 50-day moving average. If you see, right from November, the markets have always traded above the 50-day moving average. So if you look at what the 50-day moving average, we are very, very close to 50-day moving average, which is about 150 points lower. And the GIFT Nifty is already indicating that we will see a 100 gap. Now the same situation in other. Bank Nifty, of course, is a much stronger instrument. It has just broken the 9-day. It's still not come to 20, and 50 is far away. If you look at all others, see, here, look at Dow Jones, for instance. Dow Jones has broken all the moving averages, and it is leading. It is probably going to lead the entire global markets down. Let's look at what is happening globally today as far as the asset classes are concerned. The Dow Jones fell down, Nasdaq fell down. They were all up 400 points up. It was Dow Jones from 400 plus. It has come down to minus 248. Nikkei is down by more than 800 points. Hang Seng is down close to 250 points. DXY, the dollar index, is up by about close to 0.2%, around 106 it's crossed. Oil is touching 91. Gold has bounced back. Silver has bounced back. So these are the things which we are looking at. We go into trade. Today, the smart money is very strongly bearish. The regular analysts think that this is a pullback and one should be buying it. But I always believe in the theory that always follow the money. When you follow the money, in this case, the smart money, you'll invariably know what to do. I, for one, will not venture to buy any stocks today. I will wait and watch. And tomorrow is a holiday. So all that uncertainty will come to plague us in the last half an hour. So in my opinion and my analysis, please note that I'm not a SEBI registered analyst. Please also like, share, and subscribe to my channel. I end up here by saying that today one has to be very, very careful on longs. At best, one may want to look at the precious metals, which are likely to do well if the markets were to collapse. And this is Vijay signing off. Thank you for joining. Have a nice trading day.